As you would all be aware, gentlemen, the economic prosperity of a nation is the main driver for steel consumption. In order to this, there are other specific drivers such as the manufacturing intensity, the fixed asset investment intensity, the urbanization rate, and the population growth rate. The fixed asset investment intensity, urbanization rate, and population, they play a major role in determining the growth of long products in developing countries. They drive the construction and infrastructure investment in the country, which drives the long steel consumption. Now, as per the World Steel Association, 52% of the 1.768 billion tons of steel used in the world in 2019 went into building and infrastructure. Now, this percentage would be higher in case of developing countries like India. Currently, about 60 to 70% of steel consumption is goes into infrastructure and construction in India. Now, as per the United Nations report in 1950, only 30% of the people in the world lived in urban areas. In 2007, for the first time in history, the global urban population exceeded the global rural population. And since then, the numbers of the world's city dwellers has continued to grow faster than the rural population. In 2018, 55% of the world's population resided in urban areas. Towards the end of 2030, the share of the world's population living in urban areas is expected to reach 60%. And it is projected that by 2050, the world's population will be more than 60% and 68% in urban areas. Against the world average of 55% urbanization in 2018, the urbanization in Asia and Africa has been much lower, between 40 to 50%. However, the rate of urbanization is currently the highest in these two regions. The urban population is projected to reach 66% and 59% by mid-century in Asia and Africa, respectively. The continuing urbanization and overall growth of the world's population is projected to add 2.5 billion people to the urban population by 2050, with almost 90% of this growth happening in Asia and Africa between 2018 and 2050. The urban population is expected to grow by 416 million in India, 255 million in China, and 189 million in Nigeria. So we can see that India is going to be a big growth center of steel, long product steel in the world.
Speaking about some of the demand drivers in Egypt, let's explain that the demand in Egypt is being shifting from the individual housing and building, like people in rural areas, they used to build on the rural areas, on the agriculture places. That was a big threat for the country because you have disorganized urbanization system, or you don't have even an urbanization system. The country are taking some measures to curb this, so they banned the buildings at all till they review the procedures for how to make buildings and the way of ensuring an urbanization environment and smart societies. So we can see that there was a big drop in the licensed built unit in Egypt, close to 31% in the financial year of 2019-2020, because of this and also because of the COVID-19. But now, since last May, everything is in place. I mean, the regulations are in place to get a building permit or license before you start the building. So this, we hope that it will stimulate the demand on this residential issue. But when it comes to the projects, Egypt is having, super mega projects. We can see in different aspects. Those are a list from me, but we can see in the next slide something more categorized by housing, transport, new cities, and the roads. So with housing, there are too many initiatives in the country, and the good part is that now there are some instruments from the Central Bank of Egypt, so the monetary policy also, they are working to support and to stimulate the demand on the real estate through providing specific systems, financing systems to, let's say, to the middle class at 8% interest rate, and for the very low class at 3% interest rate, and for many, many years. So for the middle class, 8% for 25 years, and the low income class, 3% for 30 years.
What I would say is, obviously iron ore prices have come down quite a bit in the last quarter. On the DR side, I think the supply remains tight. In terms of what we're seeing is, possibly increase in premiums, definitely in the first quarter of 2022. Longer term, as some of the supply that had been decommissioned in Brazil, etc., as that comes on stream, maybe 23, 24, I think the premiums should finally start coming down. But I think in the given, if you look at the global dynamics, the U.S. producers excellent margins. They're buying DR pellets. In the region, obviously, there's a huge demand for DR pellets. So I think the demand for DR pellets looks strong and obviously undersupplied. Premiums should go up. Iron ore, on the other hand, I'm not expecting the sort of $200 levels, although again, difficult to guess. But I think there is going to be that disconnect in terms of the DR market versus
when it comes to North Africa, I mean, most markets got some hits for sure because of the COVID-19, but this year was good, I would say, for North African countries. Because if I make, a statement on the export, for example, to have the feeling, if you look at the trade flow between North Africa and European Union, you will see that the imports from EU was dropping, because you know that for the rest of North Africa, apart from Egypt, they are having like free trade agreements or quota favoring EU, etc. So they used to get material, even the billets from EU, countries like Tunisia and sometimes Algeria, Morocco. So you see the flow of trade, it's going to EU, not from EU. You see Egypt, Algeria was very active in exporting of wire rod. Then Egypt was very active also in exporting of HRC. So North African countries, in my opinion, was doing well. If you see some statistics on the crude steel production, I'm picking up Egypt as an example. You see that the crude steel production grew by maybe close to 30% in the first 10 months, coming up from 6.6 million ton crude steel production to 8.5 million ton. And the utilization will be fantastically growing to maybe 2/3, so like 67%, for sure, thanks to the flat. Definitely the billet production are higher than last year, but the flat is super high. I mean, the utilization for the slab production in Egypt may be exceeding 80% this year. So this is,